In today's video, I tested a simple Forex strategy for almost 7 days straight, and the results were honestly shocking. Let me show you the exact rules. It is pure price action. No fussy indicators. Just watch it up the end so that you don't miss anything, guys, right? So now here are the rules. First of all, we are going to use only one time frame, and that is a 1 hour time frame. The next thing is we are going to always consider market structure shift, right? And for the entry rules, we shall consider our candlestick confirmations, okay, and liquidity confirmations, right? So now here, if you see this, it has to take you only seconds to know the structure, to know the market structure. Where is it moving? Is it a bullish trend? Is it a bearish trend? Okay, so now here, it was a bullish trend right here, right? So now if it is a bullish trend, that means we had to look for buying opportunities. But now here, we wanted to look for selling opportunities. We want to see the market structure shift, right? So now here, it was a bullish market. Why? Because this was a low right here. Can you see this? That was a low, right? But that low came under and made a market. So that was a break of market structure right there. Okay. So now, always after the market breaks another structure, we are either expecting another move. Okay, we are either expecting another move, like we always expected the market to come to our zone, all right, to these zones, okay, and it buys again whenever it breaks the market structure. We either expect that, or we expect our market to come and break this low, right? This low we have named here, we areas are expected also to come and break that low, and when it breaks that low, that means it has made a market structure shift. And whenever the market makes a market structure shift, here we are expecting it to come to the certain zones, and it sells, because now it has turned from being bullish to bearish. That's why it has to sell after breaking the previous low, right? So those are the things that we expect from the market. Now when you look at this market here, right, let me first remove this. When you look at this market, that was a high, and when that high was created, remember there was this high that the market was resting at, right? So now we are either waiting for that high to be broken or for this low to be broken right here. Okay, for this low to be broken right here, this one. Okay, we are either waiting for that high to be broken or for that low to be broken. So now instead of breaking this high right here, what it did, it created this higher low right here. So that means it wanted to shift structure, right? So now it created that, and it created a low here, right? This is a low that it created, then it created a high right here. This was a higher low, right? This was a higher low, and this was a lower low. It created a higher low and a lower low. So now here we are expecting the market to come and break this lower low right here. We can name it. Okay, this was a lower low here. Let's name it so that we don't become confused, right? So that is a lower low. Okay, so we have named it a lower low, right? So when the market now comes and breaks this lower low, it has turned from being bullish to bearish, and that's what it did, right? When you see the market here, it came and made a break of this lower low, and when the market breaks this lower low, it means that now we have turned to bearish direction. Now we are going to look for selling opportunities, right? So now here, when you understand that, I'm telling you that you will get like setups that are aligned with the market structure. And if you are new to trading, I made a PDF for complete beginners. You can check it in the description, and also risk management for beginners. You can check all the links in the description below. So now here, when the market broke this lower low right here, now we always expect the market to come back. We always expect the market to make a retracement, and you can see this is the retracement that the market made. And when the market makes a retracement, we are expecting it now to turn from our zones. We can use a fair value gap zone. We can use an order block. Some people use support and resistance, or demand and supply. Any you use, provided you are trading with the market, right? So now this was a higher low. But remember, always there is what we call inducement. Sometimes the market to move in the direction always it has to first take out the inducement. They create fake sales. Now, for example, this was a fake sale. That's why the market had to come back and take out this that higher low for it to move. But before taking out that higher low, we had some zones. We had a fair value gap zone right here, right? And we had an order block right here. I made a video about order blocks and fair value gaps. You can go and check in the description how you can identify them. You can see that the market came and tapped in our order block. Okay, so now for the entry rules, we said that you always enter your market when it comes and taps your order block and it gives you confirmation. Which confirmations are you going to use? We said for this case, this is a 1 hour time frame. We are going to use a candlestick confirmations and liquidity. First of all, when you see this higher low, we come and mark it. When you look at it here, you'll see that the market came and took out that higher low. And when it took out that higher low, it liquidated the early sellers. When it liquidated the early sellers, that's why you can see that it left a wick. It didn't break this higher low with a full body candle. Rather, it was just liquidating. That's why you are seeing this wick. So immediately after liquidating these early sellers, that's when big boys will come and enter the market after identifying that all liquidity has been taken out. Now people will just come and enter their market. You have to put now your stop loss just above here. Here you can put your TP here. You put always your TP according to your risk to reward. A 1 to 2, a 1 to 3, or a 1 to 4, 5. So that's how you put your risk to reward, right? So now, after that, guys, let's go. Now the market has turned bearish. You'll see that it will go on making breaking lows. Now this one has become our new low. Right? That one has become our new low. Now we look for our new high. This is our new high now, right? That's one. It is our new high. Now we have got a range, right? We have got a range. How do we get a range? A range, we always wait for the market to come and break this low. You can see this new lower low right here. That is a new lower low, right? So that is a lower low. When the market comes and break that lower low, it will always make a retracement. When it makes a retracement, when it starts making a retracement, you will see that it will give us a range now. Now our range will be between this that low and this high right here. Now we always have to trade in between our range, right? So now here you will see that in our range we have our zone. We have our zones. For example, there was a fair value gap zone right here. It was so big. There was a fair value gap zone. And when you see the market here, the market didn't come to our fair value gap, didn't reach there, which is okay. So we just leave that, right? So now we go to our another lower low. There is another lower low here that the market has made, right? We can go to it. So we always have to follow this structure. When you follow the structure, I'm telling you, everything will be fine with you. There is that another lower low that the market has made. And then when the market makes another lower low, you are waiting for the retracement to your zone, right? And the market actually did come to your zone, which is okay. We go. There is this lower low that the market has made now. When it makes this lower low, you always have to look for the higher low because we are in a bearish market. This was a higher low that the market made, right? That led to the break of market structure. That means now we are trading in this range between that high and this low right here where the retracement has started from. You can see that we are trading in that range. In between that range, we are having some zones. We are having an order block right here. That is an order block and very many fair value gaps, but mostly we shall look at the order blocks. You can see that the market, when it came to your order block, you can see how it behaved. It created some candlestick confirmations. First of all, when it tapped in your order block, you can see this was a very fast confirmation that you would use to enter. Another confirmation, if you missed this, you would use this insider candle. It created this bullish candle. I always talked about this candle. It first fakes with this momentum candle, the bullish one, then it makes an insider candle. So now for you, your role is just to enter immediately after confirming that yes, the market has showed to us that it is bearish. Then for the entry rules, I told you that you always have to put your stop loss just below that, and you put your TP on this previous low. You can see how the market has moved, guys, right? Then after that, you can see here it gave us some bullish confirmation, but all that wasn't necessary, because there was this lower low right here. You can see the market created a lower low right here. Okay, when it created this lower low, now we are waiting for the retracement. Now we shall trade in this range. The range that we shall trade from is this. This was a higher low right here, and this is where it started making a retracement from. That means your range now it is kind of big. Now you trade from this range. Okay, you can see that when the market started the retracement right here, you can see that it went and it turned from your flip zone. This is a flip zone right here that it turned from. I will teach a flip zone in another video. Now we are seeing order blocks and fair value gap. Then that one, it is okay, we didn't trade it, and we said now it is fine, right? So now after that, you can see here, this was another zone right here. Okay, so this one, you can see that it came and broke this low, right? We are still bearish. Whenever it makes a break of market structure, we always look at the high. This is the high, right, that made the break of market structure, and this is our low, right? That means we are trading in this range, right? You can see that in this range, there was an order block that actually we were to look at, to pay attention to this order block. When the market came to this order block, you can see the candlestick formations that it formed in this order block. It formed dodge candles, which are very good confirmations that we always trade on this channel. So always when it made this, we should not wait for anything, right? Because that is our candlestick confirmation that we look at. So I said that we put your stop loss there and your TP here. It is 1 to 3 and you go, right? And you wait for another break of market structure. Then for the bullish momentum, it is the same thing, guys. It is the same thing. Whenever you see a break, for example, this is the bullish market now. When you see a break of market structure right here, it is right here. This is the break of market structure. When it breaks market structure, we always look for the higher high, which is here. This is a higher high it made. So that means our range is between that higher high and this low right here that the market left. You can see that when the market retraced right here, it came up to your discount zone, right? Can you see that there were order blocks that were in your zone that the market actually looked at before it moved, right? And when it touched there, it made very many confirmations. It made insider candles and it rejected that zone so much. So on this channel, we always don't wait for more than 2 things. Just when we get our confirmation, we always put your stop loss, your TP there, and you always put your stop loss right there, and you move, right? So guys, I think that video is helping you, okay? This doesn't mean every week you will be profitable, but if you want a strategy that is simple, repeatable, and easy for beginners, this is a great one to test, especially on a demo account before using real money, okay? So if you want a Forex like basics for absolute beginners for only less than $4, I said I have put the link in the description below. So thanks for watching. If you found this video helpful, hit that subscribe button. Subscribe for more real trading tests. See you in the next video.